Welcome to the Wheelbarrow Profits Podcast, where you get multifamily investing made real. Learn from top players in the real estate investment world as they share their secrets with you and discover proven strategies on apartment investing that actually work. To learn more about Wheelbarrow Profits, visit jakeandgino.com, your one-stop shop for everything multifamily. Now to your hosts, Jake and Gino.
Hello, everybody. This is Jake Stenziano, host of the Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, the chef, the father of six, the best-selling author, the G-Daddy, Gino Barbaro. Gino, how's it going?
Mr. J-Daddy, you got your shirt. I'm waiting for my shirt, right?
You don't know that I got my shirt, but I got my shirt today. Big shout-out to our boy, Nick. How you like me now, huh?
I like you just as much as I did 2 minutes ago, bro. Show me the love.
So, Gino, why don't you give a quick shout-out to our sponsor here?
Another guy we love, Jake, right? I need to ask you one question. Do you need a great property management software for your rental portfolio? Like we did real bad, right, Jake? Mm-hmm. Horrible, real painful in the beginning. PropertyCzar is a web-based property management software designed for portfolios of all sizes. PropertyCzar includes all the features of the leading software vendors at prices that's affordable even for the smaller portfolios. You know, whether you manage 10 units, 900 units like us, or 10,000 units, PropertyCzar's base entry point is affordable for all. And Jake loves that word, affordable. He likes free even better. PropertyCzar comes with complete accounting systems in addition to calculating your cap rate, cash-on-cash return. With PropertyCzar, you can track your assets, screen tenants, accept online payments, conduct on-site inspections, online applications. It goes on and on, Jake. The list is endless. Tenants can even submit work orders along with pictures via the mobile app. Schedule appointments and set unlimited reminders to all attendees. You can also set reminders to change HVAC filters or service other equipment. Guys, find out why PropertyCzar is quickly becoming the property management solution for portfolios of all sizes. And right now, our listeners can start an FREE trial. That's right, free, no credit card required. Just go to propertyczar.com/Gino.
Today's guest is Brian Daly. Brian is the CEO of GROUNDFLOOR, a company that is in the process of taking private lending public. In August of 2015, they became the first and only nationwide real estate lending marketplace open to participation by non-accredited and accredited investors alike. Today, thousands of individual investors are earning 13 to 14% on loans of 6 to 12 months secured by single-family fix and flip houses. Well, you know, I'm not a fix and flip guy, so I'm about to get my learn on here, and I'm really excited to learn about this. So, Brian, welcome to the show.
Hey, thanks for having me. Good to be with you guys.
Man, thank you for coming on. Tell us a little bit how you got the company started and what you guys are all about.
Look, we started GROUNDFLOOR because investing in real estate isn't a level playing field. I'm sure many of your listeners recognize that and know that. It's for a lot of reasons. It's for reasons of securities law. It's for reasons of how the real estate capital markets are structured. And we started the company to change that.
Now, give me your background. What did you do before GROUNDFLOOR?
I started a wireless company. Maybe some of your viewers have used it. I started a wireless company called Republic Wireless. What was special about Republic Wireless is we said, we don't need big wireless companies to control how we use our phones. And we don't need to be locked into contracts. Internet technology, in the same way that internet technology is changing finance and changing real estate investing, we saw how internet technology could change wireless service. And Republic Wireless is a really great company, still going, very successful, hundreds of thousands of subscribers. And now we're doing the same thing, frankly, in finance that we did in wireless.
So how did you get it? How did it was the conception? How was the idea of creating the company? And how did you start the company?
Well, I was looking for, as an entrepreneur, I really like to work on something that matters to people. If you look around in the world, as I do, all around us, there are people with a lot of power who control a market, who get to say what we get to do and how we get to do it. One of the great things about web technology and social media today is that that's changing. And you see that in politics, you see it in philanthropy, you see it in finance, you see it in wireless, you see it in a lot of different places. And so as an entrepreneur, I'm always looking for those opportunities because I got to tell you, and anybody who started a company will tell you this, nobody really cares about your startup. And so you better find something to work on, whether it's your project or your startup that people do care about. And we did. We found a space where people were fed up with the way the banks had treated them through 2008, 2010, 2012. We found real estate investors who deserved access to capital and weren't getting it. We found real estate investors who, really could put capital to use in new ways that other people weren't thinking of. They were the innovators that nobody understands. And we realized that on the other side, there are millions of individual investors who want access to these deals, but don't have hundreds of thousands of dollars to invest. So we created a $10 minimum investment, and we started crowdfunding loans about 4 years ago, and have never looked back.
Well, so I have so many questions. I mean, let's first start out with the Jobs Act in 2012. How did that impact being accredited, non-accredited, and how did you come up with the idea to target the non-accredited?
Well, I'll tell you, what I was interested in is in reformatting a financial market so that everybody could participate. Because the funny thing is, Wall Street with their advertisements and the banks would want you to believe that everybody has a shot. That's not true. They're selling you a lie. And one of the reasons that it's not true is financial regulations, securities laws. The securities laws that were meant to protect us actually stand in the way of us having an equal opportunity for the money that we have to invest. Now, the Jobs Act was meant to change some of that by opening up and liberalizing capital markets. I met my co-founder because he actually worked on those rules. He worked on those laws in Congress earlier in his career. And I actually thought we would use those rules to create this sort of movement, to create a product based on this. Mm-hmm. We actually did. We used them in a way that I didn't really expect. There are several parts of the Jobs Act that are relevant here. Happy to talk about the different parts of it if people are interested in that, and I can tell you about the part of it that we used.
No, let's go into all of it because I want to set the stage, jump into your company, but I think people need to understand this because we have a lot of people trying to raise capital. I want people to know the nitty gritty about how to do this and how it was effective.
Well, here's the nitty gritty. If you're raising capital, the fact is, if you want to go out and invite lots of people to contribute capital to your project, if you want it to be available to everybody, the securities laws say that you have to register an offering. That's been true since 1933, the Great Depression. Mm-hmm. You have to register an offering. And so if you see a company IPO, that's what they've done. Or if you see a REIT that's filed paperwork with the SEC, that's what they've done, right? It's very expensive. It costs hundreds of thousands of dollars. And if you're only raising $100,000 or $500,000 or $1 million, it's probably not worth it to go through all of that. Mm-hmm. Very expensive. So there is an exemption to that has also been around for a long time, where you can raise money from accredited investors, basically high net worth people, if you believe that they're if you can prove that you had a reasonable belief that they're a high net worth investor. But even when you do that, you can't advertise it. So you can't do it as an entrepreneur. You can't do a press release that says, I've got a great real estate project and I want lots of people to invest in it on the internet. You would be guilty of violating the securities laws if you did that. You would hear about it. You don't want to do that. But if you quietly went around to people who you knew had big checkbooks, you could then attract investment dollars from them legally. And that's how it's always been. The Jobs Act created a few different ways to get around that.
So let's talk about those ways, how what they created in the Jobs Act to get around that. I think that's important to people to know. Yeah.
So the way that everybody was most excited about, that's now known as Reg CF, the crowdfunding law, also known as Title III of the Jobs Act, put forward some rules where a new set of intermediaries, sort of websites, could show up, where investors could shop for deals and entrepreneurs could post deals. But there are certain rules in place that you have to follow. You have to use one of these approved portals. There are now something like 20 or 30 of them. Some of them specialize in real estate. Some of them specialize in stock investing. But it's still very early days, right? There are a couple that have some traction in startup investments. There aren't really many yet using those rules that have traction with real estate investments, because the fact is some of those rules are pretty difficult to use. But I think it's worth watching for people who are in the audience who are interested in that. Hopefully a platform will emerge that uses those rules to a great effect. And that part of the Jobs Act in real estate, frankly, hasn't yet been very successful. We think there are a bunch of reasons for that. We saw those reasons, and we actually used a different part of the Jobs Act that I'll describe next, if that makes sense.
Yeah, please describe it. Go ahead.
Another part of the Jobs Act is known as Title IV. This is what a lot of people have heard referred to as Reg A or Reg A+. Now, these rules also go back a very long time, but the Jobs Act updated them. So Title IV of the Jobs Act updated them. Under these rules, traditionally you could raise up to about $5 million. That was expanded to be able to raise up to $20 million under one set of rules or up to $50 million under another set of rules. Now, the reason that people weren't really using Reg A before the Jobs Act took effect in about 2015, before those new rules took effect, is it also cost a lot. It didn't cost as much as going public or registering an offering, like an IPO, but close. For example, the average Regulation A filing will cost, between the audit and the legal work and so forth, it might cost $100,000 or $150,000 on average. And it could cost more, it could cost less. But that's a lot of money for most people if you're just raising even a few $1 million. Mm-hmm. So I think those rules can be used for very large projects, but we haven't really seen them used much in real estate, except in a few isolated cases. Ground floor is one of those cases. What we've done is established an offering under those rules that is an umbrella offering. So under our offering, an investor, anybody who's listening to this show, any retail investor can show up to our website and build portfolios of loans. And the loans themselves are maybe $50,000 or $150,000 or $250,000. They're relatively small loans that are for fix and flip projects for the most part. And, we provide loans to these real estate entrepreneurs who then list them, or we then list them on our site for investment. And, you can build a portfolio of them. We've used the rules to make it possible to invest with as little as $10 in each loan. But this is a particular way that we're using the Jobs Act. We're able to raise up to $50 million a year under the rules. That allows us to do, depends how large the loans are. Our average loan is about $150,000. So we can do about 500 or 600 loans a year, depending on the size. So that's sort of, when people think of the Jobs Act, there's some other elements to it too, but they're typically either thinking about the crowdfunding part, which is Title III, or they're thinking about Title IV, which is the Reg A part.
Okay. Where do you see your company going? You walked us through the whole part. Well, why don't you walk us through the whole, I guess, a little bit more of how people can sign up to onto the platform. Walk us through that a little bit. Sure.
So we had some big news just last month, actually. When we first started, it took us about a year and a half to qualify our offering because it's very unique. It took about $1 million for us to qualify our Regulation A offering for the first time. While we were doing that, we were piloting our product in Georgia using some state laws. And that's another thing that people on your show, listening to your show, should think about. If you have local investors and you're fortunate enough to live in a state like Georgia, where there are crowdfunding rules in the state, you can do like we did, and you can raise anywhere, depending on your state, you can raise anywhere between $1 million, $2 million, sometimes $5 million from non-accredited investors for your project in your state without having to do a lot of legal work, right? Usually the legal work is pretty easy. North Carolina just passed a law like this. We use that to kind of get going. Now, we knew that we wanted to be able to fund loans all over the country, and we knew we wanted to allow investors to participate all over the country because we're a venture capital-backed startup, and we have, objectives that are, to become a big and successful and famous company someday. So once we were qualified by the SEC, we could only sell our investment to about a third of the country using the rules that we were using. We had to go qualify at a state level and a federal level. In January, we became qualified to offer the product all over the country. So that's a big moment. That means anybody who's listening to your show now can come to Ground Floor, sign up for an account. Once you establish your ACH connection, You can fund your account. You can invest as little as $10. That's great. That means, even if you only have $1,000 to invest or $100 to invest, you can build a diversified portfolio of loans. So you show up with your $1,000 and you can choose up to 100 loans that you want to spread your money around into. Now, most people invest a few $100s per loan. Most people will only pick, say 10 to 20 loans, but you can build your own portfolio the way that you want to. You want to focus on a certain part of the country, you can do that. If you want to focus on a certain type of deal, you can do that. If you want to focus on low risk investments or high risk investments or spread it between them, that's up to you. I mean, what I find remarkable is if somebody came to you and said, you can buy into the stock market, but you don't have the option to choose the stocks. You like Tesla or Apple, you can't buy that. You have to buy a fund. We would all laugh them out of the room. We'd say that's un-American. We'd say that's not fair. If only 5% of the people could actually buy stock in the stock market directly, we'd all object to that, right?
Yep.
Yeah, I got a quick question. Oh,
yeah.
Sorry. So
what I'm saying is that's what people have been fed in real estate investing. People have been fed, you have to buy a REIT. And people know that REITs can be very risky and very expensive. Well, we let you build your own REIT. You get to manage your own if you want. You can go build your own portfolio.
What about the bio and the background on the actual the fix and flipper, the guy that's out there investing the money and then working with the GCs? Because this is very interesting to me. Because say Gino and I were fix and flippers,
sure,
there'd be a page within your website for Jake and Gino, and then a history background on what these guys have accomplished. This is their track record. This is the rate they hit typically. And then so if I like these guys and I know they hit, I can push my money into their account, and then I see another guy that's trending. Is that how it's basically set up?
You don't push your money into their account. You're not actually investing in them. You can choose to invest in their loans.
Yeah.
And so that is a strategy that some people who invest on our platform use. They sort of look for a certain type of investor that they want to put their money with, right? And every time that investor or somebody like that investor who works in a certain area, who has a certain track record, or who works on a certain type of project, they'll invest behind that guy or that woman.
That loan that's going into his project. But are there stats? Because this to me is going to create like a baseball or fancy football type
it could
thing.
Be Moneyball.
You're seeing like who's Dak Prescott this year had great quarterback ratings or whatever, and you're going to see Flipper Joe on the west side is pegging 20% returns for these guys or something like that. So
that's a big part of our vision, right? That's a big part of our vision.
You're going to be creating superstars. A&E's going to be calling you. I need to get this guy in the show here, and
I think when we started the company, we saw that opportunity too, and we're working our way toward it. Yeah, absolutely. Because look, as you know, who the investor is and what his or her
your money in the person, not the product. You want the person to perform.
You're betting on the jockey. You really want a good jockey behind these projects. So now that said, we vet everybody who comes through. We don't just let anybody put up a project, right?
Yeah.
They got to prove their track record to us. We audit their track record. They got to give a spreadsheet of their deals. We go, check off that they actually did this deal and exited for this price, and that it was a real deal. We check public records for that. So, we'll work with less experienced people too, but we want to have, people have to submit information about what they've done in order to qualify, for a good rate.
I just think that the investor profiles of the fix and flippers could be just an amazing aspect of the website. I'll definitely check it out when we get off the show.
I agree.
What are your average returns? What are the average returns that guys on the platform want to receive?
Well, most of the credit we write, sort of by the numbers, dollar cost weighted, is between 10%. So it's a pretty good rate for this type of loan. Now, if you want to take a lot of leverage, or you don't have a lot of experience, or you're in a market where days on market is high, if there's something about the underwriting that comes through about your deal or about you, the rate could go up, right? But we actually give people a slider, and they can kind of choose. You know what? I'm going to put 20,000 in, and borrow 120,000, and the after repair value is really high in relation to that. So I'm going to get a great rate. I'm going to get an 8% rate or a 7% rate. another guy might say, you know what, I want to put less money in on that deal and I want to borrow more, and he's going to pay a higher rate for that. So we let the borrower decide. The experienced guys, usually want to get 8 to 10% on their money, and their experience really weighs in their favor. So we'll let them take even more leverage than an inexperienced person would. And that's just right. So we look at the market, we look at the person doing the work, the entrepreneur, and then we look at the actual project itself. And we have an algorithm that assigns that rate.
Mm-hmm. Are you able to actually invest in the deals or just in loans?
By which you mean like take an equity position in the deal?
Yeah.
Not today. Our product today is a first lien debt product. Okay. So the investment every time, and I think an equity product is pretty interesting, by the way. It seems like you do too. Yes. But the product we offer today is a debt product. So you get to be the bank. You have the benefit of our first lien position on the property.
So my priest friend told me no margin, no mission, right? So how do you guys getting paid? How are you monetizing this platform for your company?
We're greedy capitalists. We're doing a lot of good in the world, but we also want to do a lot of good for our shareholders.
That's right.
I want to say a word about our shareholders in a minute too, because that's part of our mission and an exciting piece of news that I think your listeners might find interesting. So we earn our revenue from the borrowers when they take a loan from us. So we charge origination fees. Now, what we do not do is make revenue on a spread between the rate that we charge and what the investors earn. So investors earn exactly what the rate is. We don't take anything off of that. We make all of our revenue on origination fees. The goal, even if our origination
How much are they?
They can be as low as 2%.
That's low.
And there's some situations where we'll charge 4.5%. We have a unique feature to our product that few other lenders have, which doesn't require you to make monthly payments. Now that's a great thing if you're an entrepreneur, right? If you're on Shark Tank, Mr. Wonderful always wants to put a royalty deal on you, and Mark Cuban will always tell you, don't take that deal because you don't want to be servicing debt while you're trying to grow your company. You should be our feeling is you should be investing that cash in your project.
So once the thing sells, everyone is made whole, right?
What's that?
Once the deal sells, everyone is made whole. Yep.
And it's only 8 months. It's 8 months, 10 months on average, so it's fine. Now we do have a monthly payment product as well. So people that want to make monthly payments or want to have a better rate or want to pay fewer points, they can do that. So the points, typically range between 2 and 4%. And that's how we make our money.
Where do you see your company growing to? I mean, you've got these announcements going on. What do you see for the vision of the company?
Well, we are obsessively focused on our mission to level the playing field. If we just wanted to be a really big lender, we could, like anybody else, go get some institutional capital, hook it up to our origination machine, and get really big really fast. I don't think that's a very interesting mission, and I don't think that's a very interesting business, because I think ultimately it's a low margin business and a tough business in which for anybody to win. We want to serve a greater number of retail investors. We want more people building portfolios with us. And in order to do that, we got to continue to expand what we're allowed to do under the rules. So we have this Reg A offering. We're allowed to do $50 million a year. That's why we have a wait list. So we have a wait list of investors who want to put money into our loans, and we can only serve so many at a time right now. So our big objective is to establish our offering on a higher plane where we don't have that limit, so that we can build the business without those regulatory limits. We've been on the bleeding edge of securities law since the beginning, and so we just got on that. In order to finance some of that growth, we're actually now offering shares in GROUNDFLOOR itself. So we are just getting ready to announce the launch of our online public offering, where people who invest with us can also own a stake of the platform itself now. Our thinking is, although we've raised VC money in the past, we've raised about $7.6 million of early stage VC capital, venture capital. We're now turning it over to the people who are actually using the product so that they get a piece of the pie as well.
Wow, This is a little joke to Jake. I can see Bitcoin in the future. I can see the ground floor
I knew we were
coin.
going to the dark side of the internet.
You gotta go there.
Okay, whatever you got to say, bro.
I'm thinking of the Joey coin. I'm just thinking of the ground floor coin. That's what I can see it in 5 years from now. Everyone's joking about it right now, but I can definitely see this platform. And I know he's a disruptor, so I'm sure that he can speak to this a little bit. I mean, am I making a joke about it? But how do you see that transforming in the next 5 years? That because, like you said, you guys are talking about Dak Prescott and all that, and the more popular you are, the more popular your coin's going to be, the more value it's going to be. So can you say that for a minute or two, enlighten my partner?
And then we'll talk Pokemon too. Okay.
You get a coin. I feel like Oprah. You get a coin. You get a coin. You get a coin. So look, we are building a serious financial product that is heavily disclosed. We have a 174-page offering circular. We have audited financials. It's a real financial product. I think blockchain technology is incredibly exciting. Intellectually, philosophically, I love blockchain technology. I will tell you that I think the regulatory structure has a ways to go before investors can put their money into these coins as securities confidently. I think that will happen. I think the technology is incredibly important. We're watching it. We haven't decided to go that direction, at least not yet. But I think the technology itself is thrilling. I mean, it's as thrilling to me as using a web browser for the first time in 1994 was. Right? We were all visiting like whitehouse.gov, right, or NASA. Those were the sites, right? Mm-hmm. I feel like we're in that phase. We're trying to figure out what is email, what is instant messaging, what is web browsing, and now, of course, 25 years later, it's unrecognizable from what Amazon was back then. There are going to be some great companies built on this technology, and we're watching it. I'm personally very bullish on the technology itself.
So that's what I ask you. So blockchain, it's all going to be open source, right? It's all going to be democratized. It's open source. How do you see it affecting your company and affecting the financial services and the crowdfunding platforms?
Look, I think there are a lot of factors driving this revolution and this movement. Okay, one of them is something that we've been tapped into since the beginning of our company, and it relates to our vision. People are waking up. People are waking up and saying, the financial system that brought us the near disaster of 2008, it's time for, time's up for that. Time's up for that kind of concentration of power. And I think that is probably, that psychology among individual actors is the most important factor at work here. Paired with that is the technology that makes it possible, right? Mm-hmm. What I'm looking for as an entrepreneur is as a way where I'm not just going to do the technology for technology's sake, but where I can use the technology to solve a real problem. Let me give you an example. Let's say I sold our product today in the form of Bitcoin. I still have to turn the Bitcoin into dollars that my customer can spend, right? Mm-hmm. Somebody is taking a currency risk on Bitcoin. Just using it as a currency itself isn't compelling enough for me as an entrepreneur. What I'm looking for, though, is a decentralized method of reflecting and exchanging ownership and for transacting. Now, some of the work that's been done with Ethereum is very interesting. And I've talked to a number of founders who are working to utilize the blockchain in different parts of real estate finance, real estate transactions, closing, ownership. I think there's interesting work there, but I'll tell you, as somebody who's been a part of the internet economy for 20 some odd years now, mm-hmm. This will take longer than any of us think. We have a real business at Ground Floor where we want to tap into and utilize that technology. We're already using the investor psychology and the social psychology around it. And so I'm looking for the right time. If some of your listeners have ideas about how they think Ground Floor could use that technology, I am all ears. Because as an entrepreneur, I want to support the movement and I want to use it for sure to do great things in the world. And I think there will be a time when that's true for us, there will be other innovators who come alongside us that use it. And I'm watching for that. I'm watching for it.
I can't wait. I can't wait for the educational system and the Wells Fargo's of the world to just implode and say, okay, education is going to be basically free on blockchain. You can do anything you want. It's all open source, and Wells Fargo is not going to charge you $2 to take money out of your wallet. And somebody in Africa in a hut with a Nokia phone with a cell tower can transmit money to you. I can't wait for that to happen. When that happens, power, like you said, from the central governments, from centralized power, from these big universities, institutions with $17 billion endowments are going to go bye-bye because you don't need them anymore. So I don't know if it's going to happen in the next 5 to 10 years, but I can't wait. And that's going to be awesome to watch.
I'll tell you, the best analogy I can come up with is where we were on the web in 1994 and 1995. eBay and Amazon and Yahoo and Excite. I was at Excite in the 90s. That's where we are. And I think what's about to happen could be even more important than what happened in the last 25 years.
That's awesome. I got one more question, Jake, before the quick round. I just want to know, do you have any, best tips or any really great tips for listeners on crowdfunding?
You mean for those who want to use crowdfunding?
Yep.
Yeah, I would say, if you want to use crowdfunding for your project, ask yourself why. Make sure you have a really good reason why, because if you know why you want to use it and you're really clear about that, you'll make a good choice about where you go to in the choices you make to go use crowdfunding. The people who get in trouble with crowdfunding are the people who don't really understand why that approach is one that's important to them and what value it has for them. I think there are lots of reasons to use it, but you need to be clear about what yours is. And then that will guide you to the right resources, to use for it.
Brian, I love your entrepreneurial spirit. You've been a successful guy. What is a habit that you use on a weekly or daily basis that's led to your success?
When I'm at my best, I get up early. I start my day with prayer. I meditate and I plan my day. It's a foundation for me. I notice when I'm at my best, that's what I do. Now, I'm not disciplined enough all the time to do that. Some days I sleep in just like the rest of us. My girlfriend wants to go get coffee with me and I go do that instead. But when I'm at my best, that's what I'm doing. And I think if you can find habits that work for you and you don't hold yourself to some unrealistic Spartan regimen, but you know what's good for you and you do it. In my case, prayer, meditation, and planning out my day in the early hours, preferably around 5:30.
And taking care of your girlfriend.
What's that?
I said, and taking care of your girlfriend.
Yeah, you know what? Sometimes give yourself a break, man. If you're an entrepreneur, that's hard work. And you got to manage your energy too. So, but those are some habits that really work for me.
Any tips on managing energy?
Yeah, don't force yourself to do the things that you don't have energy to do. Pay attention to your energy and allocate it carefully. You can't fight it. In my opinion, you can fight it, but you're going to burn a lot of energy and you're not going to be your best. Be self-aware about when you have energy for what and follow it, obey it. Be honest about it, especially with
yeah. We were just talking about it before the show. He came into town and we were ramming, 2 days in a row from, he got up at 3:00 the one day and I think we finished up about 9:00. And literally last night I started feeling like, you ever get that toxic feeling in your body? You're like, dude, I just went too far. I need to shut it down for a minute. And I was like, shit. Because I've been more aware and I get to that point, I start to pull back a little bit now. But sometimes it happens when you're hanging out.
You know what? Last night I woke up, at about 1 a.m. and I couldn't get back to sleep. And I'm like, I want to crank out some work. I want to take care of some things, and I did for 3 or 4 hours and it's kind of trashed my day today. I'm not, I know that. And I told all my people that. I said, I've got this podcast I want to do today. I got to step up to that.
Dude, clear the schedule coming out with Jake and Gino. Everything.
Well, I did. Come on, man. I told people this morning, I said, look, I can't do this meeting. I can't do that meeting. We just got to find another time to do it because I was honest. I'm like, I'm not at my best, and I got to conserve some energy for these guys, because it's cool to be on your show. You don't get to do that every day. So I think that's an example. You got to be honest with yourself about your limitations. A lot of people think they can white knuckle it, It's like people with their faith. Like, if I were just better, if I just behaved better, that's no way to go through life, man. Be kind to yourself. You deserve it.
I agree.
Any book recommendations, business, real estate?
Yeah. For people who work in teams, if you work in an organization, or you have a team that you are working with on your real estate projects, or you have a team at your jobs, I recently spent a lot of time rereading Lencioni's 5 Dysfunctions of a Team. And if you're into that kind of thing, it makes a big difference in the organizations that are able to understand that philosophy.
You read that one?
No.
5 Dysfunctions of a Team. I'm going to check it out.
Pretty good. Good stuff. Easy to read and kind of get, harder to implement. One of those things.
You got a number 2?
Number 2 right now, top of my head. I don't have a number 2 right off the top of my head. No.
That's all right. What project are you excited about right now?
I'm excited about this equity raise for the company. I'm excited about having our customers and people who are excited about the Ground Floor mission participate in owning a piece of that pie. We've been working on that for 5-6 months now. We're taking it live next week. Actually, by the time your podcast is on, it'll be up and running. So that's a big moment for us. Anytime as an entrepreneur, you pour your heart into something for 5 years like we have, getting to share it with the world and seeing how the world responds is an exciting moment. And that equity raise and the way that we're doing it is really, really motivating and exciting to me.
Awesome. So the folks listening to the show right now, who should get a hold of the company? Where should they go to get a hold of the company? Is it the fix and flippers? Is it the guys looking to invest? Is it everybody? Who do we want to get to the website, and what website are we pushing them to here?
There are 3 people that should head over to groundfloor.us. We actually own the .com now too, which we took care of when we raised venture capital. There are 3 people who should do that. Number 1, if you're a real estate investor who's fixing and flipping houses, we want to talk with you. We've got great terms, very flexible terms, really good pricing. We can handle first-time flippers, but we prefer the more experienced guys. We'll do a broader range of credit for them. I think you'll be pleased. So please come check that out. You can start an application online, talk to a human being, and get a good deal. Secondly, people who are interested in building portfolios of these loans with as little as $10 at a time, I apologize, there's a wait list, but come get on the wait list and we'll get to you. That's number 2. And then if you've ever thought it'd be cool to own equity in a startup at a growth stage, now's an opportunity to do that. And if you're excited about our mission, I hope you will. Come join us. You can invest with as little as $100 to own 10 shares of the company, the $10 share price. And, I'm excited to make that shareholder group thousands of people. I do not think venture capitalists should get all the upside. So if that excites you and you want to be a mini venture capitalist, show up and make us one of your first holdings in your portfolio.
Very cool. G-Dad, what you got over there?
The only question I forgot to ask really was about self-directed IRAs. Do people use self-directed IRAs to invest in the platform?
Yes. As people who've used them may know, talk about an old industry that has lots of paperwork and red tape. Mm-hmm. Woo! Boy, IRAs are one of them. We cut through a lot of that and did a deal with a third-party custodian that we've integrated into our website, where you can come in, set up your own self-directed ground floor IRA to invest in our product and in the company. That's available via our website. It's pretty straightforward. You can transfer money you can roll over money from another IRA, partial or total. You can sort of start a new one if you want to, but that's all available now.
I'm glad I asked that, because that's a great thing for people on here who want to diversify, who want to have some G stock, let's say, and they want that's an awesome that's a great alternative.
Yeah, it's been a very popular product for us since we introduced it last year.
That's awesome.
No, Brian, it's been really nice talking to you. Thank you for your time.
Thanks, Brian.
Thank you guys. Thanks for having me.
We trust that you enjoy the Wheelbarrow Profits podcast. Visit jakeandgino.com, your one-stop shop for everything multifamily. See you next time when Jake and Gino share more of their investing secrets with you.